So welcome everyone to the HubFizz live show, where you can get ideas to help grow your eco-conscious business. And today I'm joined by Adam Claydon from Loveday and Partners, talking about investing for good. So welcome, Adam.
Good morning, Karen. Thank you for having me on. Really excited to get going.
Yeah, really good to have you on the show. So Loveday and Partners, who Adam works for, is a company of independent financial planners. And Adam says he strongly believes that his profession can be a useful force for environmental and social good. So questions, Adam. So how important is it to take advice when planning for our financial futures?
Yeah, I think financial advice is a resource that's quite underutilized, really. I think the norm in the UK is that people don't really discuss their finances with each other, or at least certainly not in any great depth. And I think that's true in a lot of places in the world as well. But that, combined with a lack of financial education in school, means that a lot of people don't necessarily know what's going on. They can miss opportunities, or sometimes they do know a bit, and actually that causes problems in its own way because they miss, they start off down a road, or don't perhaps get everything quite right, and that can have consequences as well. So I think that people have quite a lack of financial literacy in general, and I think having someone who can be available to provide advice on that is really, really useful. I think there's a perception that financial planning is only for people who've got sort of millions and millions of pounds, and while of course those people that they do have their own problems and their own needs from financial planners, that's certainly not the case, really. I think it can be really useful for everybody. I think it's useful for people at all sorts of life stages. So certainly people who are in their where they're building wealth, they're in their maybe 20s, 30s, even 40s, depending on their exact situation. There's often thinking about what your long-term plan is going to look like, and looking at that, but also, of course, saving for house deposits, or protecting a young family, or paying for children, or whatever it might be, whatever your life looks like at that stage. Then we move into sort of a later stage usually between 40 and 60, where you really start to think about retirement, and we're building quite heavily for that. But also you've often got quite a lot of other things going on in life with, it might be children, or it might be, whatever else you're doing in life. Lots of traveling is quite a common one. And then we get to retirement, which is usually one of the most intense periods of planning, and sort of spend a lot of time working out what you're going to be doing and how we're going to fund it all. And then after that, there's a lot of planning involved in how you're going to, pass money down the generations, if that's what you want to do, or to charities, or whatever you want to do that way. So there's quite a lot of scope for different ways we can help. It's certainly not all just investment and trying to, sort of grow a pot of money to be bigger. I think there's a misconception, although of course that is really important and is what we're going to talk about today to an extent. But a lot of people don't realize that they do have investments. I think most people watching your show who are employed, or at least, and quite a lot of those who are self-employed, perhaps who have accountants and things like that, will have a pension. And there's a very strong chance that inside that pension you've got investments, whether or not you know it. And again, that's something that we can help with. It's quite a large part of what we do. And as I wanted to talk about today, I think knowing what you're invested into and making sure it suits your views and your goals is absolutely vital.
Yeah. So so talking about that, sort of where you kind of invest that, have you seen an increase in people wanting to make environmentally or socially sound investments?
Absolutely. Yeah. I mean, when I started in the industry a few years ago now, what was then called ethical investment was quite sort of an esoteric concept. It's existed for a long time because you've had perhaps religious investors, and there's always been people who are very sort of keen to have their environmental or social views incorporated into their planning. But it really wasn't very common. I remember my first experience with a client who had these kind of views, that it was through their work actually that they had this kind of view that had sort of developed. They were involved in ecology, and just trying to meet their wants and needs was so difficult. It was so difficult to even find the information and where to start without just sort of picking something that had ethical in the name and hoping, basically. Now that's changed quite a lot over recent years, and which what we suppose we refer to as the Attenborough effect or the Greta effect or whatever it might be, is certainly a part of it. And groups like this, and obviously sort of, you and I know each other, Karen, from a networking group that's that I think you run. Yeah. That's it. But those sorts of groups have also, created quite a lot of extra knowledge, and I think socially it's much more of a big issue now is environmentalism and social awareness and things like that. So really now it's a massive increase. I spend all day getting emails from investment managers about this sort of thing, but in terms of new clients who come through the door, it's probably, I don't know exact numbers because we speak to everybody about it anyway, but people who bring it up with me, I think is probably getting on for about a fifth or a quarter of people who I meet now, at least want to know what they're investing into. Is it going to be involved in armaments, or is it going to be involved in mining or deforestation or exploitative business practices or whatever it might be? And so the industry's really had to develop in ways that it can meet those needs and meet those goals and say, no, it's not invested in those things, and mean it and be accurate. Because 5, 6, 10 years ago, that really wasn't the case. And the demand has really helped, and I think we're working towards it being, really, really, really good, but it's certainly a lot better than it was.
Brilliant. I think that's really important to do that and support those that are doing good as well. So, even amongst those of us who are environmentally and socially aware, there are often differences of opinion and approach. So is it possible to reflect that when you build an investment portfolio?
Yeah, absolutely. I think that's really important. And it's probably the most important thing to be able to do when you're doing this, because if you can't, it isn't one size fits all for these views. So if you can't do it, you're not doing it properly, in my opinion. So when we look at what we call investing for good, we call it that because historically, the term ethical was used, which doesn't really mean anything to anybody. And so that means I can split it out much more granularly. Now, there's a style of investment which is usually for charities, trusts, people with quite strong religious views, that sort of thing, where you say, I don't want to be involved in these sectors, these businesses, but I'm happy to have anything else. Now, that's quite a sort of it's an old-fashioned way of doing it. It doesn't necessarily mean it's wrong, but for some people it is right, but it's quite an old-fashioned and blunt way of doing it, because you then have to change those criteria based on how the world changes around you and what new scientific knowledge you have. And also it can be, quite restrictive as well. There's other styles of investment. So there's one that's quite, I really enjoy and I'm really interested in. It's what's called impact investing, which is for those people who are really interested in actively making a difference. So those sorts of businesses you'd be investing into are ones usually working towards the sustainable development goals. So you might have green energy businesses, you might have companies providing education to areas of the world that are less economically advantaged, companies who have really, really strong policies or are actually trying to make an impact on equality in its various guises. Those sorts of businesses, some people, and I assume quite a lot of your viewers, that's sort of really quite important to them, and certainly a lot of my clients, it's really important to them. But it's also, again, a fairly, I don't want to say extreme, but it's a fairly niche market, because if you go and talk to Joe Public, not that many people want to be as laser focused as that, but a lot of them still want to generally be doing good. So in the middle, there's what we call sustainable or environmental, social and governance investing, where basically what you do is you look at the environmental impact of a business, the social impact of a business, and how well it treats its staff and fair pay, things like that. And then it has to achieve over a certain score in those factors to be considered investable. Now, that's really, really nice, because even if you don't want to go down either of those quite strict routes, you can encourage the flow of money towards businesses who are behaving well or behaving in the way you wish for them to behave. And large businesses, at least, their owners are targeted, and their CEOs and so on are targeted on their share price. So if you're investing into them, and their share, or if you're not investing into them, more importantly, and their share price is falling, they've got to do something else. And if when they realize that actually better behaviors would encourage more investment, that can sort of change the direction of those businesses. Which is a sort of it's nice. It works really well for all of us, of course, because changing how business works is the most important thing we can be doing in my eyes. But, it's not necessarily the strict approach. So certainly, depending on your views and exactly how you want to attack it, or even a blend of those things, yes, we can take into account all sorts of views. And I think anybody who purports to be investing in this way should be able to do that.
Fantastic, yeah. And so how will we know if we're putting our money in environmental investment? Is it something we can research and proceed with ourselves, or?
Yeah, it really depends what you were trying to do. So if you were trying to do the type of investment that I'm not involved in, which is speculation, and you were just saying, I've got this money, I don't need it, I'm going to try and double it or make it go up 10 times, there might be a company that you're really interested in, and you possibly could get a lot of information on that company. A lot of the time, a lot of that information would be quite hard to get, but you might be able to dig into that one business well enough to satisfy yourself that they were doing good. The problem is that when we look at investment, we're not looking at short-term, 10 times gains. We're looking at a long-term, more stable portfolio, and that requires diversification. And that's not, 5 to 10 companies. That might be hundreds of companies. And simply to do that yourself would be really, really difficult. Now, of course, you can look at very high level. You might be able to pick, 20, 50 even companies that you knew in general did well. But certainly, I think we have to go further than that, because as we all know, there's a lot of greenwashing in the world, and you want to be able to get past that. So that's really where an investment manager would come in. That's not my job. My job is to find the investment managers who can do this, which I think we'll come on to in a moment. But those people have to be looking down the supply chains of those businesses. They have to be looking at the management structure of those businesses and exactly what sort of succession plans they have in place, what sort of controls there are to make sure that things continue going in the right direction. There has to be a financial case to invest as well, of course. You don't want to jump into say a wind energy company just because they're a wind energy company, and then next year they completely collapse and it was foreseeable. So to do all of that research yourself, it's, I suppose, theoretically possible, but I certainly wouldn't want to do it. And I don't think that anyone really that isn't an investment manager has the capability to do that. Now, that's fine, because all that means is that you just need to find the right person to do that for you. Okay, so I personally have gone out and we as a company have gone out and met a lot of investment managers pre-COVID, of course, all the ones who we think can do this well, and interviewed them and really grilled them on their own processes. To give you an example, there's one company I know of where they have one sustainable analyst who is someone who's just interested in sustainability and looks at all the businesses and says yes or no. That's fine. But we know other companies who every investment analyst in their team, and that might be 20, 30, 40, also looks at all sustainable criteria of the business. It has to have certain criteria to be considered investable, and every decision might go through an external committee of people who aren't related to investment. They're sustainability people, Now that to me is much more robust. Yeah. And that's the kind of thing that you would have to look for in an investment manager, which of course we have done, and we're very happy to help you do. But I really don't think that it would be an easy task to do it yourself in a financially sustainable way. Unless you have, you could give a full-time job to doing it and a lot of training, I suppose.
That sounds like quite a process.
Yeah, absolutely, it really is. But I think it's absolutely right, because if you want to, if you're working towards retirement and you have possibly a large chunk of money, for a lot of people what's in their pension is the largest chunk of money they'll ever have, and you are considering investment and it's important to you that is used in particular ways, then you want to make sure that it's actually being used that way. I certainly know businesses who claim to be socially responsible, who one of their biggest holdings will be Facebook. Well, there's debate, or Amazon. There's debate to be had there. That would be a red flag for us.
Yeah, and that really then is the key of coming with someone, coming to someone like you, because you can guarantee that you will you do all this background research and look into it and everything. I mean, that's fantastic. Unfortunately, we have come to the end of our 10 minutes.
Oh, sorry.
But that, really great information there. And how can people get hold of you? Is it best to go via your website, lovedayandpartners.com?
I think that's probably a good place to start. So lovedayandpartners.com. You can email me, adam@lovedayandpartners.com. I'm sure I'll be in the comments as well after this call. But yes, you can find me. Those are probably the best two places to get hold of me.
Fantastic. Brilliant. Well, thank you so much for joining us, Adam. Really great pleasure to have you on the show. And Happy New Year to everybody else out there. And we'll catch you next week, same time, 11 a.m.